I think there are quite a lot of positives to be taken out of a very tough set of results in this market. The economy of South Africa isn't exactly growing very quickly, and business, the scale of Growthpoint reflects that to some extent. But the main theme in the results is really the impact of increased interest rates on our numbers. And I think the other positive is we've seen actually improvement in the fundamentals, property fundamentals. So vacancies have reduced. We've seen that negative reversions on renewals when we renew our leases with our tenants have improved quite a bit. And that really is right across all our investments in South Africa, as well as in Australia, Eastern Europe, and the UK. And then the standout performance is clearly the Victoria and Alfred Waterfront, where we've seen significant growth on the back of what is actually a very fast-growing tourism market to the Western Cape.
Those who operate in your sector and perhaps who are even tenants within some of your properties always give us the sense that it's been a really tough period, especially as a listed company in this environment, and that every year happens to be tough. When you look back at the period, were there any curveballs that you didn't anticipate?
Well, starting with COVID, clearly that was quite a significant factor if you look back a couple of years now. But, I think the property industry has moved forward. And if we look at the past 6 months under review, I think that my view would be actually that the fundamentals and the performance of the properties have actually exceeded somewhat. The impact of higher interest rates and the velocity or the speed at which those interest rates came into the economy and the rate that they were increased at was a little bit of a curveball, and I think didn't just catch corporate South Africa a little bit offside, but many of the investors as well. So we received quite negative feedback at our year-end results when we reflected a forecast of seeing 10 to 15% reduction in our distributions. We have now brought that back to 10 to 12% negative distribution growth. So I think the interest rates are definitely the main theme in real estate globally. So it's not just in the South African context.
Let's talk about the dynamics that you're seeing when you look at the retail, office, and industrial sector within your portfolios.
Yeah, so our industrial portfolio is worth about 13 billion rand. It's about 2 million square meters of industrial space in all the major metropolitan areas. And in fact, that portfolio is performing pretty strong, and we actually continue to invest into that specific sector. We've probably delivered in the 6 months close to 65,000 square meters of additional industrial space into that portfolio, and the demand is strong. Most of the developments have been fully or partially let, and we're seeing a good demand for the new product coming to the market. And on the existing portfolio, like for like growth has been pretty solid. So I think the industrial space remains quite buoyant. South Africa continues to import most of our goods, and on the back of that, the logistics sector continues to grow. In moving on to the retail side of things, I think December was a very, very strong month across the retail shopping centers, and we're talking predominantly large retail shopping centers in the metropolitan areas that Growthpoint owns. And for December, if we compare it to December 22, December 23 grew 5.9%. So strong growth in the shopping centers, and on the back of that, we have seen that our retention rates in our shopping centers have improved quite a lot as retailers, elect to remain in the premises so that they are, and in some cases even expand their offering. And then we've also seen that, when leases come up where they used to revert negatively quite materially, that negative reversion is pretty marginal now, and possibly in the future may even go into a positive sort of reversion scenario. So, those are all very positive things for the retail sector. Clearly, electricity outages and water challenges, become the landlord's problem, unfortunately. So if the municipality isn't working functionally, we do have to deal with those challenges. But many of our shopping centres today have backup power and from various sources, so solar power and generating power.
Right.
And then if we move to the office sector, that by far is the most difficult sector. And, if you look at the buildings behind me in Sandton, we've certainly, seen the oversupply in the Sandton market as a bit of a challenge over time. But, even there's been quite a lot of green shoots. We've done a phenomenal amount of letting in this market and been able to bring down, just in Sandton, our vacancies by more than 20,000 square meters, which is quite material. And every year, Growthpoint does, across our portfolio, in close to 1.2 million square meters of new letting and renewal. So the volumes are quite material.